Hey, good evening. Dan Fitzpatrick here, stockmarketmentor.com. And it's Thursday, February 6th. We had a great live trading session this morning for members, and it's something that I've had a lot of people asking me to do it more often. So that's probably going to happen. I'm not exactly sure how, but I don't mind getting up a little before 5 in the morning. So anyway, here's the stuff that we did. I want to look at Wheaton Precious. In fact, we'll do this first, and then I'll show you some of the things we did this morning. So we'll start out with gold here. So gold has been kind of strong. Silver still kind of hanging in there. One of my ex-favorite stocks is Kirkland Lake. That's not doing well. Franco-Nevada it still just kind of keeps on going, right? Keeps on coming. And then now we're back to Wheaton Precious Metals. Silver. And the reason is because I see this kind of setting up to be a pretty good low risk long. You know, I'm not really sure whether I'd say it's high probability, simply because we've got, you know, I see this little breakout here, but that quickly faded. So we have this resistance here right at 30 bucks, but we have a higher low here. And if we want to kind of extend it back further, we've got this, so 3 higher lows depending on how you want to count. So this is how you're going to make the trade. The first thing you want to do is you got to decide where you're going to put your stop. Where's your risk? And what I do is I'll look here in this case, okay, where does the stock have to fall in order for me to say, oh crap, okay, I'm wrong on this. And you don't want it to have to fall that far. I'm not talking about setting a tight stop. I'm talking about setting a reasonable stop. In other words, like, what's your reason for putting the stop where it is? You can put a tight stop on any trade that you make, and you're virtually guaranteed to get knocked out most of the time, because a lot of traders, what they do is they place stops that are too tight, but and increasing the odds that they're going to get stopped out. But I'll go back a step further and say their issue isn't the stop, it's the entry. It's the location of your entry. And what you want to be doing is, like, here, I'm digressing, but you know, that's what I do. Let's say you're entering here. You know, you've seen the stock traded down here, and then 2 days in a row it ran up. And then finally the third day it also ran up, and that's where you bought it, because by golly, you just knew this stock was going to break out above this level and keep on going, and you might be late, but by gosh, you're not going to miss the train. So then the stock runs up a little bit, you're still holding it, and then it starts to fall and fall. And in order for you to know when you are wrong, you really have to look at what's happened before. And this is really your support level that I've just drawn. So you're buying up here close to 30. Your real support level is down here below 28. That's a pretty big risk. On the other hand, if you didn't chase the stock there and instead had a different entry, like let's say here, you can make these kind of entries. This isn't just backwards logic. You can, if you have a process, you can do this. And now you're putting a stop. You could just say, all right, well, it's back above the 50, so I'll keep a pretty tight one there. Probably the more viable one would be to keep it here. Then the only reason you're going to get stopped out is if the stock falls back and undercuts this and prints a new low. It's a pretty choppy stock, though. Well, here we got a pretty good indication that there's buyers coming in. Volume heavier than it has been over the last couple days when the stock was just kind of drifting down to the 50. And now if you look at where the stock's closed here, you drag this down underneath, say, this low, the low from Tuesday morning when the stock traded down there, you can keep a tight stop of 2.5%. I mean, that's not very much money to risk. And what you're doing is you're placing, if the stock trades around here for a while, however long, that's really okay. Your trade isn't making money, but it's not losing you money. And you may certainly be correct in buying the stock. Maybe it's just a little early. But if the stock falls back down below, like below this level, then you want to be out of the stock because you don't know how far it's going to go. So anyway, this is a stock I think that's buyable here. You got about 2.5% risk. You look to see how the stock trades up at 30, and then if it breaks through, that's when you add some more. So let's look at a couple stocks that we covered today in the opening rotation, which is what I call the first hour of trading. World Wrestling Entertainment. Somebody's head got slammed into the turnbuckle here. A couple weeks ago, or it was last week, the stock gapped down and didn't really move much. We actually traded this too. So it just kind of happened that we were able to trade it again next time around. But some board members left, and that knocked the stock down. And then this morning, the company reported some pretty brutal earnings, and the stock came down again. Well, it gapped down a lot. It gapped down 17%, and so we were looking to go long this stock, which is exactly what we did. It turned out to be a really good trade, virtually right out of the gate. The stock comes up, never comes down to a new low, and then finally, when it's here, when it comes back up here, and we were in after 2 or 3 minutes, I think, but we got it very, very close to the low of the day, and then just rode this thing all the way up. I mean, our traders made some really good money on this. Another one was Funko here. Company said basically that like our business sucks these days, and so this was another stock that traded really low, and traders held this for several percentage, doing really, really well. And then the last one was a different kind of trade, was Twitter. See, if we go up to the daily chart, you can see the stock gapped up here right up to the 200-day moving average, where you would say, well, that's going to be resistance. You'll probably see some selling there. Okay, that's what you may expect, but it didn't happen. The stock gapped up there, and then it kept going. So as soon as it does that, you know that there's going to be buyers that are coming into the stock and are going to take this thing higher. So we had a bunch of traders making good money on that too. The bottom line is these opening rotation moves work really, really well if you know what you're looking for. I have a course called the 59-Minute Trader for trading the first hour of the open that people are making. They're really, really using it to their advantage. I suggest, I offer, whatever you want to call it, that you look at that course if you want to be making any kind of money day trading. I will just tell you, and then I'll let you go. Don't forget about Wheaton Precious Metals. But one of our members said this morning, he said, hey, I've been with you for several years, and I used to say to myself, I don't think I can do this. I don't think I can do this. But he was with us this morning, and he did really well. And he said, now I tell myself, I know I can do this. And he is doing it. So anyway, if you're not a member, check us out. Free 30-day trial. I won't know if you cancel because I'm not the one that handles that kind of stuff, but who knows, you may like it.